Why are you working, and where do you want to be in 10 years' time? Working through these questions, we are able to help you develop a wealth creation and lifestyle plan. It is critical that all aspects of your financial affairs are included in your financial plan. As you will see, everything is connected. We need to take into consideration all the personal financial issues that you will typically have at some stage in your life. Home ownership, debt, superannuation, investments, retirement, personal insurance needs, and estate planning. By coordinating all these aspects, you will be able to develop a plan that allows you to live the lifestyle that you want to live and to create wealth. Firstly, it is important to address all of your short and long-term goals, both personal and financial. What are you trying to achieve, and what would you like to be doing? But too often, we see people not having clearly defined goals and then working towards them. Your most valuable asset is your health. Your ability to earn income is what pays for everything. So the first place to start is making sure that if you are unable to work through injury or illness, that your dependents are taken care of, you would still be able to live a decent lifestyle and all of your plans and strategies don't just collapse. You can actually use your superannuation for a lot of the personal insurances that you need. Getting the right levels of cover, the right type of cover, as well as the right structure for your insurances in terms of inside versus outside of super and level versus step premiums all make sure that no matter what happens, you will be financially secure. Whilst using superannuation for insurances can have benefits, the main purpose of superannuation is for long-term wealth creation and retirement planning. There are some simple things that you can do that will really boost your balance, and the earlier you do them in life, the better, but it is never too late. Remember, your super is such a long-term investment. You don't withdraw it and blow it all in retirement. It stays invested and you start drawing an income stream. Superannuation is the best long-term wealth creation structure. Superannuation is a protected environment. It's safe from creditors and it's safe from bankruptcy. You pay a maximum of 15% tax in super and potentially pay 0%. Compare this to the tax rates you pay on investments held outside of super, which is up to 46.5%. Superannuation is an important structure to your long-term wealth creation. Self-managed super funds, or SMSFs, offer fantastic opportunities for any wealth creation strategy, as well as providing asset protection, a tax-effective environment, and control over your super. You can even use your super to buy an investment property. You can borrow to invest. You can combine your super with other family members to invest. Before jumping in to an SMSF, specialist advice should be sought to determine whether an SMSF is suitable to your needs. In order to create wealth and ultimately live the lifestyle that you want to live, you must invest. Investments should be made in growth assets such as property, shares and managed funds. It is essential that the investments be made in quality assets, not speculative or fad-type investments. The focus should be on long-term returns inclusive of both income and capital growth considerations. It is your investments, both super and non-super, that you are going to live off in retirement. The cash flow of the investment should be assessed, as should the consideration as to whether to gear into the investment or not. The correct ownership structure of investments has a massive impact on the after-tax returns of your investment. This is not just in terms of the benefits you may receive from negative gearing or depreciation. Too many people do not consider the capital gains impact on the eventual sale of an investment, and this can result in hundreds of thousands of dollars in tax. Choosing the correct ownership structure for your needs can be complex, taking into account taxation and asset protection issues. There are many options, including self-ownership, joint ownership, tenants in common, company or trust ownership, and also using your super to buy investments via a self-managed super fund. The ownership structure also determines the amount of asset protection you have. After all, what is the point in creating wealth if you end up losing it anyway? An effective debt management strategy has a massive impact to your long-term wealth creation. The amount of interest you pay over the life of a loan can be hundreds of thousands of dollars. The length of time it takes you to pay off a loan is the critical factor to how much interest you end up paying, not what interest rate you are paying. Strategies for dealing with non-deductible versus deductible debt are essential. A debt management strategy should include the correct loan structure and the correct loan type, taking into account any existing debt you may have, and most importantly, making sure that your debt is actually helping you to create wealth. Finally, having your estate planning in place to make sure that you have looked after your dependents and making sure that your assets end up exactly where you wanted them to. Working towards your goals, using the correct structures, including a self-managed super fund to create wealth, protecting what you create and own, minimising your tax, managing your debt, and ensuring you retire comfortably. All these areas are how we work with our clients to ultimately answer those two fundamental questions. Why are you working, and where do you want to be in 10 years' time? We look forward to working with you to develop your wealth creation and lifestyle plan.